Good morning, everyone, and welcome to this morning's webinar for the London Forex session. Apologies, we are just a couple of minutes late, so we'd better get a move on. But before we start, as usual, may I draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. All right, I'm just going to take that down and go straight to the charts. I've got here on my screen, as you can see, I've got the pound Aussie. Lots of reasons for it, not least because it's one of the ones that I, more than David, trade this. I also write about it on my Facebook page about Forex trading, and the reason I like this pair, it is a cross pair, it can be a little bit volatile, but it also can produce some incredible moves, and also it's a great pair for teaching the methodology that David and I use or have used in our trading and investing careers, which is volume price analysis. And it's also the pair that really sort of highlights the indicators that we have developed and are available from our company quantumtrading.com. I know in the room today we have a number of you who have already very kindly invested in the indicators, so it's always good to have you join us. I also know there are those of you who've also invested in our Forex trading program, so again, lovely to have you as well. And some of you who maybe have just come along because of my books that are on Amazon, or just come along out of curiosity just to see what we do and what this session is all about. And what this session is about is really trying to help you become a profitable and consistent trader. And how we do that is we'd obviously look at the price action. David, as I said, we have a methodology. We have a very, this methodology, volume price analysis, which is price action and volume. And onto that, you can then build your trading tactics, your strategies. But it's really important as a trader that you have a methodology. And what I mean by methodology, it's almost like a belief system, so that you understand why the price is, why the price action is doing what it is doing. What we also do is we don't just look at the chart, we then introduce to the price action, if you like, what is happening in the broader market, and not just in the Forex market. We have what we call a 3D approach, which is we have a look at the fundamental news, and we also look at what is going on in related markets, and increasingly what is happening on the political scene. Now this week, again, those of you who follow my Twitter handle will know the comment I made right at the beginning of the week was basically, from a fundamental perspective, this week is actually quite quiet. I know we've had the FOMC, we had the FOMC yesterday, and taking a quick look at what is going on the calendar today, what's happened to Thursday, you can see here, there's really, it's what's called second tier news. We have obviously later on today, we have the ECB, the policy minutes accounts. It's like the ECB minutes, the equivalent of the FOMC, which will obviously be of interest, but that's not till 12:30 UK time. And we've got the governor of the Bank of Canada speaking later. But generally speaking, there's not a lot going on today. And tomorrow is an important day because we have these flash PMI numbers. But as I said, in taking the week as a whole, not really one that was going to be driven by fundamental news. But what I said was there were plenty of other events, stuff that was going on in the background that could cause volatility. And one of them, what I said, was what was going on or not going on with the trade negotiations between China and the US. And yesterday was an absolute classic. I mean, flip-flopping. Even Donald Trump sort of posing a rhetorical question. I think he said something like, "Oh, do I really need this deal now?" And the Chinese, I think, what's the latest one this morning, which caused a little burst of activity on the markets and on the Forex market. And what will cause movements in the Forex market, where you have something like the trade deal, is it was going to affect risk. In other words, those currencies that represent risk, either being risk on or risk off, off will either be bought or sold. Now, as a trader, when you get this this uncertainty, you get this additional volatility. Volatility will certainly bring momentum in the price action. The problem is that if you're facing the wrong way because you've done all your analysis, you know, your chart analysis, and it looks like a fantastic setup, suddenly you have, you know, what does I say here? What was the one that came in? Here we are. Chinese Commerce Ministry, this was at 6 minutes past 7. They want to reach a phase 1 deal, because yesterday it was this thing, the whole thing is off, nothing's going to be decided this year or signed this year, despite Trump saying, I think back in beginning of October, that it would be 6 weeks and the first phase would be signed off. Now it's all up in the air. Suddenly this hits the market, you get volatility, momentum comes in, you'll have already done your analysis, and you could be stopped out. You could actually, from your analysis, it could actually, the momentum take your take your position in the right direction. But if you get a trigger of our volatility indicator, that is often the sign that it is just that. It's just a burst of volatility, and the chances are it is going to reverse, what it often does. So you as a trader, what do you do? In fact, this is a perfect example that we have here on the 5-minute chart of the pound Aussie. We see here we look at the consolidation, you know, drifting along sideways. There's not a lot of news. Markets sort of deciding, well, what's going to be happening today? The news come in, bang. This is the volatility triggered. Now, you know, if you had been looking at the price action, and you had decided based on the chart analysis, if you have our tools, you look at the CSI and see what these individual currencies are doing. You think, oh, do you know what? I know it's you know, it's moving sideways, but I really like the look of this. It looks like it's breaking away. I can see some volume, some selling coming in to the British pound. Yeah, I quite like the look of this trade. If you were going to go to, that was your analysis to the downside. Now that would have obviously helped you, that piece of news, driven it down, ton of volume coming in, but look at the candle, a wick to the candle, then a whole lot of buying comes in, and now we're looking at possibly a reversal. So maybe all this analysis here, forgetting this little incident here, was actually going to take this to the upside. It's this kind of market condition that you're facing, and the only way you can deal with this is A, be aware of it, and just, you know, expect the unexpected, as it were. And if you are in a position and it is going your way and things are kind of, you know, going along quite nicely, and you've got some profit on the table, just take it. You know, it's just one of these weeks, one of these you know, market environments that we're in at the moment, that you can't afford to hang around for very long, because of, as I said, of these external factors that are causing all sorts of you know, issues on the charts. Now, as I said with the CSI, this is an indicator that we've developed to tell us really what the individual currencies are doing, whether they're being bought or sold for various reasons. It could be market sentiment, could be just you know, what's on the chart for a currency pair. And what we see here, and I wanted to make a point about the CSI in this session, and that is, yes, we use the CSI to, if you like, judge whether something is being bought or sold, and is it reaching a point of overbought and oversold, in which case we're looking at a potential reversal trade. But there's also a very important aspect to this indicator, and it's best if I show you. Let's have a look at the pound. Let's take this off. You can take off all the currencies, so you can just highlight the ones that the individual ones that you're interested in. And that is when the lines are moving in parallel, as we had this phase of price action here for this is the Aussie and this is the British pound. And it's really quite important when the lines are in parallel, because they give you a number of clues as to what may be happening on the chart. And the most important clue is that it's likely to be in sideways. It's range bound, it's in congestion, it's in consolidation. The chances are it will also be rotating around the volume point of control. And when you see that, this is on the hourly chart, you know what you have to do is you have to wait and be patient, because at some point there will be a divergence, there will be a cross, and this is what we had here. We had the pound suddenly moving up, the Australian dollar moving down, and that little bit of price action is what I wrote, as what I've written about on, as I said, the my Forex page over at Facebook, explaining exactly what I have said now. So it's an indicator which gives you an instant snapshot of what is happening to the currencies. Where is the flow? Is the money flowing into the Aussie? Is it flowing into the British pound? Is it flowing into the US dollar, the yen? It just saves an awful lot of time on looking at 28 charts simultaneously. And obviously you've got different time frames. I use the hourly chart. It suits me for my intraday trading. This is like my benchmark chart. I kind of benchmark everything that's going on in the faster time frames against what is happening on the hourly. And I have a look at the hourly. What have we got here? We have a lot of candles, quite narrow spread, wicks to the top and bottom, not an awful lot of volume underneath there, these down candles, because of, this is the, we're waiting for London. It's from a liquidity perspective, it's lower liquidity, doesn't invalidate volume price analysis. But I also like to look at the shape of the candle. In other words, where the wicks, do we have a lot of wicks to the bottom of the candles, which tells us there is price support coming in. And what the candle that is being formed at the moment, we've still got another 15 minutes to go, it's kind of a doji. You've got a wick to the bottom, but you've also got a little bit of a wick to the top. Quite a lot of volume going into that. Let's see what London makes of what's been going on. And really the candle reflects, if you like, good two-way price action. There's been some good two-way price action on the faster time frame, but also reflecting that really markets really don't know which direction to take because of the uncertainty over, as I said, this trade deal. Is it on? Is it off? Who knows? We just simply have to wait. I'm just going to pass over to David because I think he's been looking. What have you been looking at? The New Zealand yen, David, or something else?
All around the place.
No, David's been all over the place. But I'm going to keep an eye. As I said, this is my pair because it allows me to, as I said, to explain the price action and volume, also show the indicators, and as I said, it's just a pair, and it's a pair that I'm at the moment I'm very familiar with.
Good morning, everyone, or wherever you are in the world. Good afternoon, good evening, and good of you to join us. And I'm just going to click that. That should move the chat box out of the way. There we go. Just sorry, Dan. Yeah. I'm on NinjaTrader. Anna's been on MT5, and of course the indicators are available: MT4, MT5, NinjaTrader, and TradingView. And in the not too distant future, they will be available on TradeStation. In fact, I've got TradeStation running on the right-hand side of the screens. I'll pull that over in a moment. I've just started on this is the indices. These are the 4 indices. They're all available on the various platforms. Top left is the yen. Top right is the dollar. Down here is the euro, and over on the right-hand side is the pound. And it does exemplify what is going on in the markets at the moment. I'll drop into the indices on Globex. You can see what sentiment's going on there. I've got the CBO index and various other sentiment indicators, and it's all a little bit choppy at the moment. There's a lot of volatility. I'll show you all that in a moment. But basically, that's what's happening. Yen is pretty flat at the moment. There has been some yen selling, but it's sideways now. We've had some decent dollar buying early doors. As Anna said, just coming up to London Open, so looking for reversals as always as we move into the heaviest liquidity of London as it gets underway. Euro's flat, not really going anywhere, although there has been euro selling, but it's all a little bit lackluster. I've got the 6E futures contract up on TradeStation. I'll pull that over as well. And then over onto the pound, that's moving sideways. Not a great deal of direction in that one at the moment either. Just head on to the indices just for a check on really broad market sentiment. And really this exemplifies what's going on right now. These are the index futures. Top left is the YM, that's December contract. We've got the NQ in the middle. These are E-mini, and this is the ES. So basically we've got the sentiment for the Dow, the Nasdaq, and the S&P 500, and these are all live. Obviously, gives you a flash shot of what is going on in terms of sentiment. And if I just pull this over, this was last night our time. This was 6 o'clock in the evening. There was a big fall, and then almost immediately a reversal. It's what we're always looking for in terms of what we call, this is an inverse souffle, what we call the souffle effect. When you get an item of news, the news hit the wires. It was all to do with trade wars again, or sanctions, and that was the response. The market fell quite heavily and then reversed just as sharply, and we're always looking for that on news. We've got exactly the same thing happen this morning. We've had this spike, we had the volatility indicator triggered, lots of volume coming in. It's a classic trap move. We've now got one to the downside here and the reverse, so the market spikes higher, traders jump in, get trapped in those positions, market makers reverse, or the big operators reverse, another volatility trigger, and back into congestion, back in the sideways spread of the candle. Also trading around the volume point of control. So in terms of sentiment, which obviously is reflected in the forex market, particularly in terms of the yen, particularly in terms of commodity currencies such as the Aussie, which are risk currencies, all of that is going to be reflected through the prism of market sentiment, which of course is reflected, broadly speaking, in indices, which is what we're seeing right now. And that's pretty much universal. You can see all three are identical between those indices. They're all trading around the volume point of control. It's a little bit negative at the moment. We've had the spike, we've had the trap, and now the market is going to push lower. Trend monitor is starting to transition into red, as you can see here. And in terms of trading opportunities, obviously we're dealing with Forex, but the same principles apply whatever market you're trading or chart. Let's head over here. This is the Aussie yen. I've got this on pretty quick. Let's just change that down to a minute, take that off the 15-second, a little bit too quick for this. There we go. And again, it just highlights what's going on this morning, trading around the volume point of control. A lot of resistance overhead. This is on the accumulation distribution indicator, this very heavy dash line here. But basically, the thicker the line, then the stronger is that area of resistance or support. In other words, it's been tested and held repeatedly and therefore grows in strength. These levels up here are minor. They've only been tested once. This has been tested a couple of times, as indeed have these guys here. This is once, this is a couple of times. But these ones here are very, very strong indeed. So for the market to break through there, we need to see an increase in volume. Obviously, what we are going to see, this is 7:50 our time, so we're coming up to the London Open. And what inevitably will happen is that we will see a spike in volume as London gets underway. It's just, that is the way, the nature of the animal. It doesn't invalidate what's gone on here. It just means that when you're comparing volume, we're looking at the European Open over here at 7 o'clock, so we quite happily compare all this. But as London gets underway, then we've got to look at what's going on in terms of just comparing like with like, in other words, from the London Open onwards. Just caught my eye when Anna had talking Forex up. There's some big option expiries coming up today, and again, they are always going to play out in terms of expiries of those at the cut, and also with regard to the London fix, which comes up an hour or so later our time. So there's lots of opportunities for market movement around those particular key points, and it's something we cover in detail in the Forex program, as you would expect. Similar sort of picture here, as you can see. This is 1 minute, 2 minute, 3 minute, 5 minute for the Aussie yen. Down the bottom, we've got 15, 60 minute, and over onto the daily. And again, it's indicative of what's been going on in the market. We had the spike on the Aussie, which was reflected in terms of the indices, which I showed you just now. Volatility is triggered. It's triggered in real time. So this would appear as soon as this price action has moved outside the average true range, because that is how the indicator works. Basically, it's looking at expected price action, and we use the mechanism of average true range to give us a signal that tells us instantly that that price action has moved outside the norm, the expected, the average, call it what you will, and therefore we've got volatility. And volatility is almost always associated with market maker participation and trap moves, because it's an ideal vehicle for them to use to trap you as a trader into a weak position, because your instinct when the market moves rapidly is to do something That is your emotional response. You want to make money, you see the market moving rapidly, your instinct is to jump in, and invariably what happens is it precisely as we've got here. We've got a couple of examples. We had this big move over here during night our time, volatility trap, and then you get the compression into that trigger, and this is the emotional pressure of jumping in over here somewhere. The market hasn't reversed, it's just moving sideways. But in moving sideways, that is emotional pressure because you don't know as a trader, have I made the right decision? Have I made the wrong decision? What am I going to do? And a lot of traders will close out after a period of time because they can't take that pressure any longer. So it's a twofold process. It doesn't automatically mean the market is going to reverse. It just simply means that the probability is that we are either going to see congestion build or we are going to see a full-blown reversal. But either way, it's pressure because you're trapped in a weak position. And it's almost invariably associated with good volume. It means the market makers are in there. You can see it here. Alternatively, what you do see with these from time to time is low volume. In other words, it's a clear trap move. The market makers or the big operators are not participating. They've just flicked the market up. They're not actually doing anything themselves, and they're just trapping traders into a weak position. Again, it's indicative of applying volume price analysis. And that's where we are at the moment. We've got a platform of support in here below, and that may well come into play. It's pretty strong. We've got a ceiling over here of resistance, which is again in play right now. We've also got the volume point of control. And the other aspect with regards to the volume point of control, not only does it give you the histogram, but in looking at the histogram, it gives you perspective on what is like to happen once the market moves away from the volume point of control. So if you're a breakaway, if that's your tactical approach to the market, perhaps you only take one tactic to market. You are a breakaway trader. You're constantly looking for congestion phases. You don't care what market it is. You don't care what currency pair it is, but you are taking one tactic to market. And that is your modus operandi. Then as a tactical breakaway trader, if you're looking at the volume point of control as the fulcrum of the market, which is what it is, it's the heaviest concentration of volume, then what you're looking at from a breakaway perspective is two issues. First of all, you're going to be looking at the volume here associated with any breakaway, because if it's a genuine move, and this is why breakaway trading gets such a bad press, if it's a genuine move, then volume will signal that it is a genuine move and not a fake move. It is not, in other words, it's not a fake out, it is a true breakout. So you're always looking at the volume. You'll have it in multiple time frames. Obviously, you wouldn't just be looking at one chart. You'll have a minute, 2, 3, 4, 5, whatever it may be, however many time frames is your preferred array. And then secondly, what you'll be looking at as the market breaks away is the actual volume histogram up here. Because in this example, let's suppose the market breaks to the downside. Once the market gets to this region here, you would expect it to move pretty rapidly because there is very light volume in terms of the volume histogram. In other words, there's very little in the way of old orders, trapped traders sitting here, congestion of orders waiting to be triggered. There's very light volume here, and therefore the corollary is, or the conclusion is, that you would expect the market to move through here pretty rapidly. And obviously this volume is falling away. You've got a bit of a build up here, but if it got down this far, then it's going to move through this region very rapidly indeed. The same is true to the upside. If the market breaks to the upside, once we've got through this congestion region of volume here and through this price-based resistance here, then the market should move pretty rapidly through here because volume is lightweight. And it's just an example of the power of using volume really in two ways. First of all, the linear relationship between volume and price. In other words, bar by bar, candle by candle, or in groups where you're seeing rising volume, rising price action, or falling volume, rising price action, so on and so forth. And you're analyzing either individual candles and volume or groups of candles and volume. And then you overlay that with an analysis of the volume point of control, where you are in its context, and what the histogram is telling you as a trader as that breakaway develops away from that particular region. So that's where we are at the moment. It's all we're waiting for London to open, so there's not a great deal going on. Let's just get over to let's see what's happening in terms of just go back onto the indices. Probably not doing a great deal. A little bit bearish. It's had the reaction higher. So sentiment is pretty weak, but we've got the volume point of control there as well. Just head on to the currency strength indicators and all the other indicators, the Forex specific ones. There we go. This is the CSI on 5 minute. This is the dollar buying we had. We're now starting to see dollar selling come into the market, the red line. So that's rolling over. Just see where it is on 10. It's starting to roll over on 10 as well. We've got some pound buying coming in now, quite decent pound buying coming into the market. Starting to roll up there. Just move that over a little bit. There we are. So we're starting to see some pound buying. The euro selling that's been going on. I had the, where are we? Just go over onto this chart here. Let's just pull up the 6E. I'll just move that up. This is on TradeStation, which is what we're working on right now. This is actually the TradeStation Global, which is it's a relationship between TradeStation and interactive brokers. If you have an interactive broker's account, and this is how this is being driven with one of our interactive brokers accounts, then you have the opportunity of the benefit of using TradeStation and the platform itself, but you can also execute using interactive brokers. It's just a fantastic relationship. It's one we'll be showing a lot of, but I've just got it running here just to show you. This is on the 6E. This is the currency future contract. And as you can see, you've obviously got volume down there. We've got the indicators. You can see the trend monitor here is flashing bright red at the moment. We've got the volume point of control. We're starting to move away from the volume point of control here, this yellow dash line. We're moving down into a low volume node here. We've got a lot of volume coming in on this particular candle. If that candle closes us, it's now whacked back up again. So we've got buying coming into this market. You can see it here. Lots of volume coming in. Nice big wick to the lower candle, lower body of the candle. Sorry, I just got an alarm going off. Just flick that off. And you can now start to see that buying come in. So we're starting to see that on the futures contract. Got some good pound buying coming in as well. You can see it here. This is moving up pretty smartly. This is on 5 minute. Let's just move that out of the way again. There we go. We've got it here. Let's just let's go and have a look at. Let's maybe have a look at cable. Just see what. Yeah, sure. I'm just going to pass back to Anna.
Right, I just wanted to jump in there for a second because there's a couple of quite important points I'd like to make, especially when the London Open is as we've seen now. We were looking at the pound Aussie, and as I said from the hourly chart here, that at the time it was looking like a doji. In fact, it hasn't. There's a nice wick to the bottom of that candle, so telling us that is buying that's coming in there. We've got a nice lot of volume there. We've gone over some, some quite not these support and resistance lines that you see on this chart. When you have a solid line, as you see here, it means it's slightly stronger. So it's taken a bit of effort to get over that, but it's sort of sandwiched between two of them. We've got support at 90.16, and now it's got to get through 90.28 if it's going to carry on up. But I also said that to me, because of all the wicks to the bottom of the candles, there was sort of price support coming in for the pound Aussie. How that reflected back on the faster time frames, this is actually the 3 minute chart. This is just prior to the London Open, and I just wanted to see, because often what happens in the London Open, you never know what's going to happen, whether it is going to carry on in the direction that the currency has been going prior to the Open. Sometimes it will reverse. You really can't you can't sort of say it always happens or it never happened. But it was interesting that we were at the volume point of control. We've had the London Open, and we've had a nice lot of volume come in, and the price has gone higher. My point is this: at these crossover periods, if you are, because it's a question we're asked all the time, if you are in a trade and you're coming to up to 8 o'clock and it's the London Open, what do you do? And there's no hard and fast, there's no hard and fast rule to it. all I would say is if you trade starting with, when at the beginning when Europe, which is 7, if you come to your terminal, I don't know, 6:30, 7 o'clock, and you see something setting up and Europe comes and it goes in your direction, the only way you can manage a trade like this is through your position sizes. Now, when you first start, we always say you shouldn't be risking more than 1 micro lot. Now, there's not an awful lot you can do with 1 micro lot. It's either on and you then have to take it off. But once you're over that and you have a little bit more confidence, then consider adjusting your position sizes. So, for example, if you see something when Europe opens and you say put 3 micro lots on, and and it's going well, and you leave them to run. As you come to the crossover period, and you're not sure whether you've got some profit and you're not sure whether London is going to, which way it's going to jump. Is it going to carry on, or is it going to, completely reverse? Well, take some of that profit and perhaps leave a small position on and see how it goes. I've been reading it's not a new book, it's an old book, but it's about risk and how when you begin to trade, what do you do to become more confident. And one of the ways you become more confident is building up your trading capital, but you can only do that in small incremental stages. Don't think when you come into trading you're going to hit it out, as I say, hit it out of the park every time. Go for the little the small wins, as it were. Build up your capital so you've got a nice cushion, as it were, and then gradually you'll be able to increase your risk. Now, what I also use here, I also have a Renko chart. Now, what I did with the Renko chart this morning was, first of all, I had it on the ATR, and it was quite a big value. It was almost 4 pips for each brick, and that was really reflecting that the price was a bit sort of sluggish, as it were, and this is what the indicator does. It picks up the speed, if you like, of the market. So I kind of left it, and as we were coming up to the London Open, I thought, do you know what, it's a little bit slow for me. If there is going to be a move, I want to see that move reflected in the Renko. So I've actually gone to a fixed value, and it's now running at 2 pips per Renko brick. And that also allows you to, if you like, take these smaller trends, if you like, these smaller moves, get in there, stay in there. The way I use it is, we have the trend dots blue. There has to be a consistency between the trend dots, the trend monitor, but I also have to use it in conjunction with the time chart. And with the time chart here, as we see, this was London. It was on the volume point of control. I do tend to favor using the volume point of control. This is my preferred. This is what I like to see on my charts. I like to know where the volume point of control is across my time frames, and I tend to use it more. So if you could say, am I a breakaway trader? If you want to give that as a label, yeah, fine. I'm happy to accept that label. David is much more a reversal trader. He likes to see if you once a move has reached a point of exhaustion, pause, potential reversal. There are different risk profiles on the different types of trades. We just, you have to choose the one that you feel most comfortable with, and it also has implications of where you're likely to place your stops. As I said, the hourly chart to me still looks like it is looking to move higher. I've also got the CSI here. This is, I've actually isolated just the pound and the Aussie, and behind it I've actually got the matrix, which is quite interesting. The matrix actually takes the data from the CSI and tells us which of the pairs are moving most strongly. And in fact, of the pound, possibly maybe the pound CAD may have been a better candidate. If I were just looking for a trading opportunity. But I was, as I said, I'm just staying with the pound Aussie because it allows me to illustrate different aspects of price action. As I said, I have a narrative with the pound Aussie, partly because I've been trading it and partly because I've also been writing about it on my Facebook page. It's just easier to have a more consistent narrative. So there we are. David is going to have a look at cable, which is interesting. It's only at spot 7. This is on the 15-minute. If we go up to the hour, where are we on the hour? Well, the hour, obviously, where am I? Spot 22. Again, I'm not seeing a lot of divergence. I'm hoping the divergence will come. We'll see what happens. The Aussie is turning down. They're not moving in the same direction. We will see what happens. It's going to be a bit of a, maybe a bit of a slow burn, this trade this morning. But when it does, then the other thing about the pound Aussie is that when it does move, in a session such as the London session, it can easily put on 60, 70, 80, 90 pips. It's one of those pairs. If a little bit of patience with it, understanding what makes it move, looking at the indicators, it really will deliver. But it doesn't deliver, doesn't necessarily deliver, you know, every day, but no pair does anyway. So we're just going to wait on this one. The next question is, well, where do I think this is where do I think this is heading? Well, I have to look at the hour. Well, I've got this high here where this pivot is at 90.51. If that's going to be taken out, I'll have to have a quick look on the daily chart as well. Yeah, we've got not yesterday's high has been taken out. We've got the high of the previous day. In fact, this is quite an important region up here, which is in the 90, 70, 78, 90, 80 area, if you like. If we can get through there, then let me just shrink that down, see where we are. There we are. We're going back up there. Let's go on the weekly. And even though I'm down on the hour and the faster time frame, it's just interesting to see what is happening on the slower time frames, because it can give you a clue. In fact, if we're perhaps on the verge of a serious breakout. But as I said, on the faster time frames, you'll be trading it, you know, nothing goes up in a straight line. You'll be trading it both sides, as it were. Right, I'm going to pass back to David, because I think you've got the cable there, David. Have you got something else? Yeah. We'll see what the pound is doing across its matrix. Okay. Oh, and if you've got any questions on anything we say, just please put them in the chat box, or you can email me later, anna@annacooling.com or david@quantumtrading.com.
Sorry, I was just checking to see if screens come up on Anna's. Yeah, that's fine. Good. Okay, I'm back. I'm on cable now on pound dollar. I've got the 1 minute, 2 minutes, 5 minute across the top of the screen, and down bottom I've got the 15, the 60, and over onto the daily. Let's reach just that a bit. There we go. We've had the this is the nice thing with one of the many nice things with Ninja, obviously, is that I'll say obviously it's not, perhaps not that obvious, but the timestamp you get on the chart is as per the local time. So this is 8 o'clock London. And what I was saying earlier on in terms of volume price analysis, this is 7 o'clock to 8 o'clock. So this is basically Europe. So we can analyze volume in here on this slice of time. This is Far East and Asia. So this is all fine. That's all now being compressed because we're getting good volume coming in. And this is obviously the London Open. So in terms of a volume comparison, we're really looking at this region here in terms of like for like, what is going on, apples and apples, and all the rest of it. A lot of volatility come in. So we've now got to be patient. If we're looking to for a reversal trade, then probably the chart to look at is this one. This is the 15-minute. It's quite interesting because we had the open here, widespread candle, but not great volume. We've had the biggest increase in volume on the next candle, which has also developed a volatility trigger. As you can see here, as I said earlier, it develops in real time. You don't have to wait for the candle to close. So in terms of taking a position, I wouldn't be doing anything right now. I'd be waiting for this to settle. What I would be looking at is the potential, as Anna said, for a reversal in this, because you've got a ton of volume coming in. If this candle closes like that, sorry, I'll pop it up full size again. Here's the top of the candle up here. You might not be able to see it on your screen, but I'm assure you it's there where this little purple triangle is. That is the top of the candle. We've got a ton and a half of volume coming in. If that candle closes in that particular format, then that is not a strong signal. That's a signal of potential weakness, because if this were not an anomaly, then you would expect this candle to be up here somewhere, nice wide spread, narrow wicks top and bottom, and a ton of volume underneath. In other words, lots of buying. So what we're seeing here is a ton and a half of selling coming into this market, and that is described not only by the candle itself with the wick to the upper body, but also the amount of volume that's driving in. That's the only conclusion you can come to, because if it were buying, then the candle would have closed with a wide spread and up. It hasn't. It's closed, or it's likely to close at any rate in the next few minutes, with a narrow body and a deep wick to the upper candle, and therefore a signal of weakness. You've got more signs of weakness here. We go down onto the very fast time frames. Here we go. So this is an exact replica of it. You've got volatility, huge wick to the upper body. We're trading inside. We've got a long-legged doji to follow, lots of indecision. I won't bore you with Brexit, but rest assured, it's still top of the news list there. And what will change is clearly once we go through the 12th of December, which is the election date, which will be a fantastic night for trading. We will be trading 24/7 that night, because it's a night not to miss. Lots of opportunities. It'll be very volatile as the results start to come in, and then gradually the market will take direction as those results firm up. But that's what we're seeing right now. Lots of volatility, and that will continue. Election polls, whatever they may be, whoever says what in the run-up, and it will tend to dominate until the Brexit issue has been put to bed, and then the pound will revert to a more stately process of trading, and a lot of the volatility will die away, and I wouldn't say it will become more straightforward, but it will become a little bit easier, and not to get trapped with these constant snap moves triggered by the various news items that come and go surrounding Brexit. But that's what we're seeing right now. Here's the weakness. We've got lots of indecision here, long-legged doji. And just to confirm, doji candles are not indicative of reversals. They're just indicative of indecision. So that's what we're looking at right now. It's just indecision, weakness here, indecision. And if this market is going to come down, it's going to come back down to this region. We've got the volume point of control here down at 24.5. So, it's only 8 or 9 pips, but we've got a very strong platform in here of potential support coming into play. We've got other minor levels here. We've got a low volume node here, so the market should go through there fairly quickly. That's only 2 or 3 pips, but nevertheless, it's just symptomatic of how to use the indicators and what they're telling you from a trading perspective. And what the question you're always looking to answer is, what is going to happen next? That candle's now closed off. I'll pull that out. There we go. Ton of volume, volatility trigger, small body, big wick to the upper side, and the market is going to weaken as a result of that, purely based on the volume profile at the moment. We head off over to the CSIs. In terms of opportunities, it's really, as Anna said, you've got the Canadian there. In terms of what's going on, this is on 15. Let's just start with 5. There we go. In terms of 5-minute, what are we seeing? Heavy selling of the dollar. I wouldn't say that's all that's driving it, but what we're seeing here is really the combination of strong pound buying, and the steepness of the line gives you an instant view of whether that buying or selling is strong, and therefore which pairs are likely to be delivering the strongest trends. Clearly, cable is one of them. We've got buying of the pound, and we've got equally strong selling of the dollar. But where you would not see a strong trend is in the dollar CAD, because if you look at the dollar and the Canadian, this purple line here, these two are falling together. So there is no trend there. Now, there may be some differential momentum between the two currencies. In other words, one's falling more strongly than the other, which will give a minor trend, but it certainly won't be as strong as anything else on this particular array at the moment. So that's what you're always looking to tease out. Where are my best opportunities? Is it this particular pair? Is it cable? Should I be looking, for example, we've got New Zealand rising very strongly here, so New Zealand dollar will be moving nicely. So will the dollar Swiss. We've got some decent strong buying in the Swiss franc here. So again, you'd be looking at that. Maybe you're looking at euro. I mean, if I pull this over here, this is highlighted earlier on. So there was buying coming in, there it came, that was it. We saw the buying coming in under this particular candle. I referenced it at the time. Now we're starting to see very strong, this is on euro, this is the 6E, this is the futures contract, but the principles are exactly the same. We've got this is currency futures we're looking at here. We've got the trend monitor. We've had a transition from what was bearish price action through into transitional. Now we're starting to see the bullish price action take hold. We're moving through the volume point of control. We've got the trend dots on here supporting the move higher. We're coming up to a low volume region here. So if this is going to continue on, then that may go on for a little while. But the issue for that particular trade, if you're trading euro dollar, is we've now got the dollar down here. This is on TradeStation, exactly the same principle though. This is CSI, heavy selling of the dollar. Now we've got it coming down into very strongly oversold. So from a trading perspective, how much further has this trade got to travel? Because now what we're seeing is a potential reversal in the dollar, so some potential buying of the dollar coming in. And in terms of the direction of this trade, it's going to go sideways, because if the two of them start to travel in the same direction, that's what I said just now, then that trade is not going to go very far. It's as simple as that. Go up onto 10. What are we seeing on 10? We've got a fair way to go there in terms of cable at any rate, buying of the pound, selling of the dollar. Up onto 15. That's all looking fine. But you can see there again, the dollar and the CAD falling together, so you wouldn't be looking at that one. Just go on to the currency matrix, see what's going on here. Let's isolate, see where we're going. That's on 5. This is on 10. And this is on 15. And what we're looking for in terms of the matrix is we're looking for universal sentiment across the market. So if we isolate out the pound, for example, just click on that there. What we're looking for is the pound being bought or sold universally in this particular time frame? Because if it is, then that's fine, because we want to be trading with the universal flow of the market. In other words, if the market universally is buying or selling a currency, the pound in this case, or whatever it may be, then we as a trader are trading with the market flow. We're not trading against the market flow. We're not trading in isolation. We're not trading a pair. In other words, the market is buying the pound and we're actually selling it. On occasion, that's fine. There may be local news. There may be a reason for that. But generally speaking, what you're looking for all the time is universal market sentiment. It's a little bit mixed here right now. What we want to see, obviously, in terms of the pound, is we want to see euro pound falling down here, and we want to see the pound moving, these other pound pairs where the pound is the primary currency, moving up to the top. Certainly pretty strong in terms of pound CAD, but then that's what you expect. If you remember back to the CSI, we saw some pretty strong selling of the Canadian. We weren't looking against the dollar. But in terms of pound CAD, that's why we're seeing it, because the pound's rising strongly, or was on this particular time frame, still is, and the Canadian dollar is selling off strongly. That's why this is starting to rise towards the top, and we will start to see that reflected across the currency matrix in terms of how that sentiment ripples through, because the principles of trading are exactly the same whether you're looking at an indicator or a chart. It starts in the fastest and ripples through to the slowest. So if this move is developing on 5 and coming out to 10 and through to 15, then what you want to see is this moving. You can start to see the euro pound there, I think, has dropped a slot or two. It's flip-flopping around. What we really want to see is this one rising along here to join its brothers and sisters, because at the moment what we've got down here is a little bit of divergence. We've got selling of the pound here and buying of the New Zealand dollar, which is not really what we want to see. We want to see all these grouping together. That's a minor issue at the moment, but certainly if these others started to drop down here, maybe we're trading pound CAD and these are starting to fall, then it's an indicative sign that this strength on this particular trade is weakening. So you've just got to be aware of that all the time. This is on the array, which gives you an instant heads up, not only in terms of strength of trend. Let's go up onto 15 again. It gives you a visual perspective on the strength of the trend purely by the angle of the line. But in addition to that, so you can start to see them ranked up and down here, but in addition to that, it also gives you a sentiment view. Again, you can isolate out the sentiment to give you a heads up. And what you want to see here is this one falling down here. Pound New Zealand is flatlining at the moment. You can see here it's absolutely going nowhere for the time being. What you want to see is these sweep higher, this one sweep lower, and this one sweep up to join the others. That will then indicate to you visually that market sentiment is universal to the pound. It'll also tell you instantly which are the strongest trends, which ones don't have much trend at the moment. Maybe an opportunity to jump in here. If this is going to continue, you might look at the pound New Zealand to follow through with the others. Alternatively, it may go the other direction, but that's for you to figure out in terms of the chart and the indicators and everything else. And finally, on the right-hand side here, this ranking or this ladder here gives you a perspective on when a currency pair is getting into an oversold or overbought condition, as opposed to the CSI when you're looking at individual currencies overbought and oversold. When you're on the CSI, what we're looking at constantly, for example, here we've got the Canadian, it's diving down into oversold. We're looking at potentially the New Zealand dollar getting up into an overbought condition, whereas when we move to the currency array, what we're looking at here is for this condition down here where it appears first of all as a darker color in brackets. That's giving us a view that potentially we're in oversold territory, potentially moving up into overbought, and when it goes to a brighter color, that is when it's reached that potential condition. So we're looking at it in terms of overbought and oversold for the currency pairs as opposed to the currencies themselves. Let's just pop back onto the time-based charts again. So we've got, we're moving sideways. It's what we expected to see. You know, there's no great direction here at the moment. We've just got to be patient and wait. That was the weakness coming in. We've got more weakness coming in here. The market's trying to rally. It's not going anywhere at the moment. It's just going sideways. And the volume and price analysis is telling us all that. This is on 15. And that's what we were looking at earlier on. So this is just all telling us loud and clear that for the time being, we've just got to be patient and wait for some further market direction. Let's just have a quick look at the indices, see what's going on there in terms of sentiment. That's all pretty weak as well, still trading pretty tightly around the volume point of control. Lots of resistance in overhead. We've got some decent platforms here. It's all very crushed at the moment. We've got the volume point of control and we've got some decent levels above and below. And we're looking for, we've just got to be patient and just wait for those moves to develop. Just going back onto the 6E, as I said, there we are. It's come up onto, as I said, it's come up to a pause point again. We're at the volume point of control here and not going anywhere particularly at the moment. So again, we've just got to be patient and wait for that to develop. Let's just go back onto the individual currency indices down the bottom here. There we go. Just wait for those to load up. See what's happening in terms of the yen. Not much happening in terms of yen, so sentiment is just flip-flopping around. No great direction for risk on or risk off. That'll be reflected in terms of the Aussie particularly. That's the selling of the dollar we're seeing at the moment. Starting to see a little bit of buying coming in here if that wick holds. In terms of the pound, you can see here we've got a nice big wick to the upper body, so there's selling of the pound coming in there now. That's why we're seeing it reflected in terms of the individual charts themselves. And the euro, again, it's back to sideways again, so it's not going anywhere particularly strongly right now. Finally, just to wrap up, if you're where to find all the indicators, this is the quantum trading education. This is where you'll find details of all the complete Forex trading program. It is a hugely detailed program. It does include all the indicators, of course. And when you actually tease it apart, the educational element is only $497 of that. I mean, it really is very comprehensive. We cover, these are the 5 core modules: psychology, the fundamental analysis, relational analysis, technical analysis, which of course goes into a forensic study of price and volume, as it says there, and the mechanics of trading, understanding how to trade, the approaches to trade, your tactical approaches. Are you going to be a tactical trader, or are you going to take a basket of tactics to market to apply to all currency pairs? Hold on just one moment, bear with me. Sure, okay. Okay. So just to run through, there we go. There's a huge array of videos. It's all self-paced, but of course you get all the indicators, and you also get the access to the trading floor, which is up here, which Anna and I host, and a lot of our students participate there. Lots of chat, and as you would expect, it's just a place to be with other volume price-based traders. Apologies, I have my chat box closed. Anna's just highlighted there are. I think there's a question come up. Someone's asked about David. I'm glad you asked the question, David, because this is where they all are. This is at quantumtrading.com. You'll find all the information here for MT4, MT5. This is NinjaTrader 7 or 8 and TradingView. The indicators, you can buy one. There are bundle deals. You can invest in the full package. If you invest in the full package, then you get all future indicators we develop for free. It's just our way of saying thank you to you. But you're more than welcome just to buy one. A lot of our customers start with one. There are lots of bundle deals you can see here. Check out special bundle deals. And as I said before, TradeStation is coming along soon. You only pay once for the license, that's it. You never pay any more. You can transfer from platform to platform. So if you maybe start with MT4, MT5, one license covers MT4 and MT5. So you don't pay for a second license. It's just a single license, covers both platforms. The same is true of NinjaTrader 7 and 8. But if you want to transfer from one platform to another, and a lot of our customers do, there's no charge for that. So if you start with MT4, MT5, for example, maybe you buy the CSI or you buy the currency dashboard, which is all the 4 indicators with the currency heat map, and then you want to transfer that to NinjaTrader at a later date, you can. We do that for you. There's no cost. It's all done and dusted. There's nothing else to pay. You get 24/7 support, and all upgrades are included as well. So you never pay us any more, whether it's a platform upgrade or it's an enhancement to an indicator. That's it. That's all you do. So that's where you get the indicators from, quantumtrading.com, and you can find all the details on the education program, the complete forex trading program, over at quantumtradingeducation.com. If you have any questions, please just drop us a line. It's if you have questions on the indicators, it's helpdesk@quantumtrading.com. You're more than welcome to drop Anna or I an email, david@quantumtrading.com or anna@annacooling.com. David, just to answer your final question, how many minutes can you hit about 50 or 70 pip move? Depends which pair you're trading, depends how many contracts you're trading. If you're trading multiple contracts, you can probably do it in a few minutes. If you're trading one micro lot, it's going to take you a lot longer. But it depends on the pair. And again, it's one of the things we cover in detail in the program in terms of which pairs are likely to move the greatest. And it's perhaps not what you would think. Yes, the pound yen is pretty volatile, but not at the moment. It's a little bit lackluster. So you're looking elsewhere. You're looking, as Anna looks at cross pairs, pound Aussie, that moves pretty good in across the time frames. It varies. Euro Aussie often delivers. And it's just understanding which pairs are likely to deliver, and it also relates to how much time you have in the market, what your tactical approach to the market. Are you in front of a screen, or are you trading slower time frames, etc.? There's so many different factors that come into play in terms of that particular question. We've got to run. We've run over time, so apologies for that, and really appreciate you coming along today. Hope you've enjoyed it. We will be back later at 3:15 UK time for the US session. So enjoy the rest of the trading day, and we will see you later. And thank you for coming along. We do appreciate you joining us today, as always, and hope you've enjoyed it. And we will see you later. Bye for now.